There we go. Hey, everybody. Good morning. Everything worked today. It didn't log me out on my broadcasting software, so glad to see everybody. And I've got a room full of awesome people with me yet again. Yay! So we've got, Goose back there, Gaten back there, Dawn back there, Donald, Diane, Dan, Darren back there, Stephen, Ed over here, Cliff's been morning here, David, Jason, John, Major John, good to see you. Jason, sorry you missed out, my man. Will, Be Like Water, Sledge back here, Kimberly beside me. Glad to see everybody in the chat this morning, and welcome. So I guess the big news of the day, potentially the government going to shut down. I don't know, maybe. They were trying to play Let's Make a Deal yesterday. Sounds like some of the players didn't want to play Let's Make a Deal. So maybe, possibly, we get a government shutdown at 11:59 tonight or midnight. And, well, what's that going to do to the market? The market doesn't like uncertainty, but typically when we get a government shutdown, it's bullish. I mean, that's kind of the thing that happens is we get a bullish reaction. Whether the government stays shut down or they play Let's Make a Deal and we get a resolution to it, typically we get a bullish reaction. It seems like a big negative event, but looking at history, it tells us that typically we get a bullish reaction. And is this time going to be different? We never know. It's just typicality. Typically we get a bullish event. And we're seeing gold break out yesterday. Nice move. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Just because I predict things, we got that all-time $3,000 price on gold. I don't know. I didn't really, I said it a long time ago, and we finally hit it. It's possible we extend it higher. We'll talk about higher prices here in a minute. This presentation here intended to be informational, educational, fun, entertaining. Hopefully you're entertained. I mean, everybody here seems to be pretty entertained the last day and a half or so. And, it's not a recommendation to be buying or selling any stocks, options, bonds, forex, futures, cryptos, treasuries. You can lose money trading that stuff. Back to the first sentence. And if you desire personal financial advice, hire and consult a financial advisor. It's not what I'm doing. I'm not telling you what to do with your money. I'm not telling you what buttons to click. I'm not even telling you, I'm just pointing out opportunities that maybe I take, maybe I don't take. I might lose money taking any of them. So just a guy here on YouTube. Look at the calendar. At 10 o'clock, coming up in 40-ish minutes, we have the University of Michigan Consumer Sentiment and Inflation Expectations right down here. Those could be a market mover. Could, possibly. We'll see. If they're substantially different than the CPI we got earlier in the week, especially the inflation number, what does that give us? Then we have the consumer sentiment that kind of ties into retail sales we get on Monday. As I've said all week, retail sales being on Monday is an anomaly. Usually it's CPI, PPI, retail sales, all right together. For whatever reason, they being whoever in the government, I don't know specifically, I don't know the ins and outs of retail sales numbers. They pushed it off to Monday. Why? I don't know. Usually we get some sort of negative news when they do that. So, I don't know. Is it the tell, or is it just crazy good news and, they just wanted to put it on Monday? I don't know. Next week, we do have the FOMC meeting on Wednesday. It's kind of the big show, right? What does Powell say versus when he does his 2:30 speech? I don't know. We already kind of know the market doesn't expect rates to change whatsoever. We've got the market rates actually declined. They were really close to breaking through the Fed's rate. We've actually pulled back and declined off of those. Maybe as the market dropped, we're getting more participation in the bond market that's pushing, those interest rates down because there's more participation. It's backwards to the way you think of a normal auction in the market. Like anybody that's been on eBay, the more people are participating, the higher the prices go, right? Everybody kind of understand auctions. The more people trying to buy something, the higher prices go. But when we're talking about bonds and interest rates, the more people participating, the lower the rate goes. It's kind of counterintuitive, but that's the way it goes. Because the people paying the interest rate, the government in the case of the treasuries, or the company in the case of bonds, when there's more people wanting to do that, that demand's higher, but they can offer lower and lower interest rates. That's less exposure for them, less money they're having to pay out to get that money lent to them. Basically, it's people are like excited to lend whoever money, whether it's the treasury or whether it's a company writing bonds or whatever it might be. Those are traditionally safe haven type instruments. Back in 2022, when they were raising rates at the fastest pace, we saw nobody wanting to go to the bond market. And we saw nobody wanting to, that's why bond prices went crazy up during that period, but still nobody wanted to do it. So we saw bonds just, getting trashed. And, that was it was a weird anomaly. Like, we don't usually see that. When we see the market pulling back, we usually see bonds, the safe haven. But that didn't work in 2022. Right now, it's doing the more traditional thing. As we've pulled back our 10%-ish off the highs, we're seeing bonds react appropriately, the historical expectation. So I don't know. As we roll through this whole next couple of weeks, we'll see. I mean, that's, I don't have a big, bold prediction on what I expect to happen. We did hit the 618 yesterday on S&P. Kind of thought that would happen. And we stopped dead on it. I mean, we poked just a hair through, as you can see right here on the ES chart. That 618 level right there. We poked just a smidge through. We bounced quickly, came back for a double test with a higher low, and we're nowhere near it this morning. Well, that's good so far. Potentially, Elliott wave-wise, potentially, it's a little bit overlappy, but potentially a 5 up, maybe. And we have the slight overlap when you pull this across with that high on the first reaction to this low on this potential wave 4, but maybe that's not the wave 4 that goes with that wave 1, Elliott wave-wise. Maybe it's the wave 4 that goes with this little baby wave 1, wave 2 right there. And that's the 3, 4, 3 being here, topping out, and this is the 4. Maybe. I don't know. We won't know until this resolves. We either blast off higher or we'll dip down lower. I mean, that's, hate to say it that way, but right now the trend is down, and until it starts proving it to me that we're going to go up, be prepared. Like, if we start breaking through the 618 support, we might go visit that 3-day. It's just right down there, that target zone. It's not far away. Just in case you don't know what I'm talking about, roadmap line right there, 3-day roadmap line. And if you have no idea what I'm talking about, roadmap line, whatever, go to the channel homepage. Watch the video on the roadmap line. I give you the code. It's all for free. I tell you how it works. And if you want to, have an easy button to put on your chart, click the more button down in the description below. $5, easy. Get it right on your chart. Just click the easy button, put it right on your chart. All right, that's available if you don't understand it. But if you do, that might be the next level if we break through that 618. So that 618, why is it important? Goes from this August low up through that February high. This has been a rapid decline right here. Not really any subwaves at all. Right down to the 618. It's this correction we had back in August, very similar on this chart right here. We did get a little green candle in between there, but when we look at this, this is very similar, but it also overlaps. So it's not an impulsive 1, 2, 3, 4 right here. It's not an impulsive 1, 2, 3, 4. What would it be? More of a diagonal. That means if and when we get this last little pop, potentially all the way up to 6,600, if and when, doesn't have to do it, this is probably going to end very violently. Crash type scenario. So this is one of those things to be prepared for. If we start rallying from here, don't get remiss, don't be complacent as we get to those upper levels. Once we start breaking out, you need to be on your guard, ready with a plan, because this is a pattern that sets up for a crash, a big flush out in the market. I'm 100% serious right now. When an ending diagonal completes, we can get a large reversal that takes it all the way back to the beginning of that pattern. That right there, at least 5,000. And we could do that in a matter of days or weeks. Probably not going to be months. It's probably going to be fast like this, just even bigger. Just even bigger. Like, I know this correction's been fast and wicked since we topped out not even a month ago. Now we're right down here at support. Potential to reverse, we'll see. So if we get below the 618, there's the zone. We get below that zone, there's the weekly zone. Just in case you're new here, first time, long time listener, first time chatter, right here, 5,000. And if you're just a first time viewer, click the subscribe button, join the chat, say hey. Let me know you're a first timer. I'd love to welcome new people. Everybody here will welcome you too. Like, if you see anybody new, like, we love new people. So anyway, do I think further decline? I would be very careful on that right now. We can have a very strong reversal. Everything's kind of bottomed out right now. We've got fear and greed pretty nasty. We've got lots of things that are kind of bottomed out. We look back through up here. The list is pretty long today. We look up here. We've got S5TW down at 16. I mean, that's pretty wild. Like, we've taken this thing all the way down to the bottom. We've got S5FI down to 25. Could we get a couple more days and push it all the way down below 20? It's quite possible. Quite possible. S5TH all of a sudden started plummeting out. It's really participating with this last few days. Yeah, we were kind of stable up here all the way through the beginning of March. Now we have lost from 60 down to 30. So we've lost 30 points. 30% of the S&P 500 stocks have given up their 200-day, given up their 200-day just in the last 10 days or so. That's kind of wild when you think about it. Like, we went from very little participation in this correction to pretty broad participation in this correction very quickly. 30% more of the S&P 500 stocks. Think about that. 500 stocks, 30%. I mean, that's like 150 stocks out of 500 that were above their 200-day. Now they're below. I mean, that's started to be conditions for ripe for a bounce, right? I always talk about, there's the market. I always talk about pros and cons. You jump through, 20-day, it's kind of indicating that we're ripe for reversal. 50-day, starting to indicate we're ripe for reversal. Now we got the 200-day coming in line with that, all that, starting to indicate we're ripe for reversal. So, as I said yesterday, we're starting to have conditions ripe for reversal. We're seeing the S&P open a little bit higher. We break back through the daily roadmap line up here. It's going to be an indication that we're setting up to go higher. So stay frosty, stay flexible. Know when you're wrong. If you're short, you've got puts right now. Know where your limit is. All right? If it starts rallying, it doesn't have to go lower. Even though things seem really bad, that's kind of the way this goes. Everybody gets real bummed out. Everybody gets real bearish. Everybody's on the same side, thinking we're going lower, and then it does the opposite. That's the way the market works. Loves to take everybody's money. Loves to frustrate everybody and then take everybody's money. NQ, been holding that 618 really well. Even though the S&P was kind of nasty yesterday, NASDAQ wasn't really. It made a higher low. Interesting, right? Starting to form a bottom. We might reverse off of this. For weeks and weeks, I warned people about being too bullish, that we might get a correction. It turns out, really, we've been in a giant correction since July or June, but, we made some higher highs in there, and now we're sitting here at a potential inflection point in the market. We could rip and go make new all-time highs on NASDAQ and ES, which is S&P 500. Russell here, though, looks like we're going to make a lower high. This one kind of broke through some support. And now it looks like we're probably just going to do a lower high in the correction. So be prepared for what happens. All right? Now, looking at oil, still down here messing around. This has that flush out potential in oil, but it's also not confirming we're going to flush. I don't know. That's a big question mark right now. I'm not very confident what's going to happen next here. I do expect a lower low, but that doesn't negate it popping up to the roadmap line first before we do that. So, not a high probability setup. That's the bottom line on oil right now. I have some feelings that we're going to do some things, but it's not really a high probability to that. Gold. Yesterday I was talking about I guess for the last couple of days I've talked about the potential for this to plummet on down to a target. Well, now we're ripping on up to the upper target. We stopped right on this 1272 extension of the wave 1, wave 2, wave 3. I do kind of expect it to rally on up to about 3040, and then maybe, it could possibly even go on up to 3100. This is pretty bullish. Seems pretty crazy. We could see this rally on up here. Could do that if the government shuts down. We could see that just pop right on up there, get a little consolidation, and do a kind of finishing move up here. Now, silver, don't usually cover this every morning, but it has the potential, but it hasn't made a new high. It made a higher high than we had right back here in February, but we haven't beaten the high from late last year. This one's still not fully confirming the move. Still not fully confirming. That's kind of makes me wonder a little bit, makes me think. And then we zoom out even more on the silver chart. Come on, TradingView, go for it. There we go. This high over here, way up here at 49. We have an outsized opportunity if this thing actually breaks through the high from late last year. We kind of confirm above 35. That's that 618. We might be on a path to get up into this 55 to 60 area. Pretty juicy. Pretty juicy opportunity, especially if you were to trade like silver futures with a spread. Those things can pay out very well. Bitcoin. Come on. We're up 3,000 today. Is that whole Bitcoin's green when the market opens? We get a green day in the market? Is that going to work out today? Can't say for sure. At least not this point in the day. We'll know at 4 o'clock. But holding support, but not breaking through the roadmap line yet. Not, at least, not definitively. We're still holding that daily roadmap line. Right in there. We're at the highs we've had for so many days now. 1, 2, 3, 4, 5, right in a row, all week, I guess. And when we look at the spot market, jump over. Come on, load. Everything's going so slow. Must be all my wonderful people in the room. Everybody's typing in it. Just joking. Anyway, just kind of hanging. Still, it looks very similar to the futures chart. Very similar. Right? So not really giving us much indication here, even on the spot market. No other additional clarity. Although this does have a little baby initial move up and a retrace, but it's still got the downtrend of highs. We're still going to have to break through all that stuff. We're still going to have to get through the roadmap line that is just spinning right now. Won't draw. Cool. It's going to be right in here. Anyway, moving on. Ethereum still not getting off the basement floor, just laying there. It's kind of like the Little internet meme with the guy with the stick, come on, do something. I hope it doesn't break down below 1600 because that kind of sets it up for down to the triple digits. I have Ethereum exposure. I've had it since back over here. I'm not looking forward to going back to zero or even going negative. So I would like to see this rally on up higher, actually get up to the targets, but right now that chart is not very supportive of going higher. So big caution, perma-cautious, whatever you want to call it, that chart does not look good. NKD possibly going to bounce back up into the box, the consolidation box we've been in since, gosh, we got in there back in February last year, did this little thing in August, and then we've kind of been back into it. We've taken this little diversion out, but we're coming back up quickly. If we get back up in that box, as far as the Nike goes and global liquidity, we're just kind of chugging sideways again. Now, this could have been a little fake breakout, and then we go ripping off higher, and that would be encouraging because the U.S. market probably go with it. Dollar, still churning here, still kind of in this 618 consolidation zone, and maybe it'll load, possibly. There we go. Still in this 618 zone, not really doing anything. We did on the Euro USD charts. Go to forex.com. That was a big rip. I mean, the Euro USD doesn't usually make big giant moves very fast. And this move where the dollar dumped and Euro ripped, that was a big fast move. It's probably going to need to chill out a few days. We've already been sitting here kind of 1, 2, 3, 4, 5, 6, 7 days. It's chilling out, but it may need a few more days. You could look back at the history and see what a consolidation usually looks like. 2 weeks-ish, maybe. I mean, we may need another 7 days here before we can take the next leg on Euro USD. That probably directly correlates with the dollar. If Euro is going to rip, dollar is probably going to be plummeting. It's one of the highest volume pairs with the dollar. All right, I go pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and we just look for opportunities here. And I'll do my best to rip through the list here. We've got, 98 tickers, I think. So it's a pretty big list. And I love how TradingView is just being so fast and responsive today. Ulta. Despite that being on the top of the poppers list, that chart looks a little bit like we might get another leg down. First move down, retrace, holding the 618 zone. Potential for this to go lower. I'd be very careful here. This is premium buyers or more premium buyers than, say, your Walmart or Walgreens type makeup buyers. And we might get down to this 200 area on Ulta. Be careful being bullish here. Despite the pop on the day, I'm not convinced that this is going higher at this juncture in the market. FNGA, new ticker for FNGU. I'm not sure why they decided to switch the last letter, but that one still has potential to go higher. It looks like we're potentially bouncing on the market being a little bit positive today. 743 would be the upside there if we're going to carry that through. ASML, kind of jumping around here. Stephen, we do a request show on Tuesday. I've already got the list here. I don't think Johnson & Johnson made the list because it's not typically a big mover. ASML, I've kind of beat the dead horse. I still expect this to break down below this uptrend of lows and get down to the low 600s before we find some sort of bottom. What's going to cause it to do that? I don't know. But that's what I expect before we get any kind of reversal. We've got the roadmap line up there around 750, and as long as we're below that, still downside target around the low 600s. That can be anywhere between 600 and 650. RDUS, wow, that's a heck of a move there, potentially reversing off of this correction. That's pretty nice, but no signs of that's going to be more awesome. When we look at that longer term, that's just kind of been sideways in a chop. And hey, good morning, John, David, JB, Pauline, Joseph. Say hi to everyone while I'm waiting for Trading View. And you see, it's just a big sideways right there. Like sideways chop, we get some pops, and then just more chops. You've kind of had a major support right there around 60. We're at 30 now, so opportunity to pop and then come right back down. So could you make money doing that? Sure. Is it something I'm going to get involved in? Probably not. Probably not at all. I like trending stuff. I'm a trend pullback continuation. I'm not just chasing things that are popping today. I've not had good luck with that in the history of me and trading. So now, in OW, service now, looks like we potentially came back to test this last consolidation. Jump down to the daily chart. Please load. And man, oh man. Maybe I ought to hit the refresh button on the, let's see. Just save that and then I'll refresh. But that kind of comes back to the breakout level. We consolidated back here in the summer of last year. We took this big rip higher, got to like 1200, and then we've come all the way back to retest that zone. If we can hold in here, break back up through this 618 zone around 1040, possibly go on up to higher levels like 1250, maybe 1300. But right now, I'd be careful. We can still consolidate down to the bottom of that consolidation from the summer, which would be all the way down to like the 700 area, kind of maybe into the 650 area even. Ouch. So be careful grabbing that one. That's like a 25% downside cushion right there still. Let's see if I reload TradingView, if it's going to be crazy or actually more responsive. See if it's just my browser being super slow. And there we go, a little more responsive. Netflix, hanging out. Potential bounce here. 618's up there around 985-ish. If we get through that, 1100 looks pretty good. Now we did kind of truncate. We didn't actually fully hit the daily roadmap line. So if this doesn't get up here and break above, we may come back and revisit the daily roadmap line. Entirely possible. Entirely possible. If we get a big market bounce, this may come up and may underperform on the upside and still need to come down and touch that daily roadmap line. Meta did hit the daily roadmap line, and we might bounce here. We've got a higher low on yesterday's price action. That 618 zone up there around 680 could set this up to go higher. We've kind of double hit on the roadmap line. That looks like a reasonable setup. If you're more aggressive, you can watch the VVD indicator or just go ahead and buy and put your stop right down here around 580. And if we flush on down, well, you get out. Remember, have your exit plan. Even if you're, there's no way this trade can lose. Make sure you have an exit plan. Know where you're wrong. It's not being wrong that costs you the big money. It's staying wrong. It's doubling down, tripling down, quadrupling down. I've watched people do it, buying the knife, and then, yeah, no problem. I got plenty of capital. I can double down there. And then the knife keeps knifing. And then you're like, well, I'll double down again. Now you're quadrupled down. And the knife keeps knifing. And at some point, you're like, oh, man, I got to cut this thing. It's way down. And that's where you take the big loss. And then invariably it turns around the next week. And you're like, well, F me. Spotify, look at that. Coming up quickly to that 618 zone. We get above that 590 area. Probably going on up to possibly 675, maybe even 700 up there. Pretty nice. RBRK, that one's bouncing quickly. Another opportunity right there. We're right at the 618 zone. We get a close above that. 84 target up there, maybe 87. And I don't usually talk about Mara it's just down in the dumps. And as long as Bitcoin's not moving, Mara's not moving. Mara's probably moving down. And app, potential bounce right there, 415 possibly, 566 on the upside. MSTR, Looks like potential to bounce. Maybe. We've got the downtrend still sitting in here, and put it on the log mode so it looks better. Just kind of sitting in here. We've got the 618 up there. We've got this downtrend of highs. As long as we respect all that, still potential for more downside. We're just hanging out right on the roadmap line. Nothing really pushing us higher or lower. PTIR is just PLTR in a leveraged fashion. Despite the little potential bounce here, we're just in the consolidation and hanging out at the breakout level. We're not really going anywhere here. Still has large potential to go hit that daily roadmap line down in the 60s right now. So be careful being too leveraged on PLTR. I mean, it's just, and PTIR, it's just a 2x leverage on PLTR. GE Veranova, potential bounce here in that resistance zone up around 670, 370, excuse me, 370, and looking for 482 on the upside. AAOI, say the words and say the letters in the right order. Back to the roadmap line, but turning red. Caution. We really want to see it above that 618 at 28 to see 53, possibly 61 on the upside. That's a pretty fair upside if that can actually do that. And maybe if you're interested in this one, set your alerts right there. Get in and respect the target. DOCU. Let's remove all the junk here. And we've got a nice retrace into the roadmap line. Nice consolidation right on the 618. That all looks like it's in the right place. If we get back above that 94 area, we can see 113 on the upside there. Goldman Sachs, not really getting off the mat here. I do expect in the coming, maybe in the next week or week and a half, probably see some rotation into financials. Goldman Sachs, Morgan Stanley, JP Morgan, Bank of America, Wells Fargo, all those bigger banks. We might see that rotation. We usually see it into the beginning of the quarter. The end of the quarter coming up in like 16 days. Beginning of the quarter coming up in April. It's not long away now. Kind of crazy. We're already like 11 weeks through this year. I mean, where's the time going, right? We're already almost 20% done with this year. CRWD, potential for this to bounce also. I kind of wanted to see it push just a little deeper into that 275 area and really set up the measured bounce, which could activate this giant, bigger upside target around 600. But right now, 490, 500, if we can get up through that consolidation right around 393. All right, QQQ. And as we know, that one retraced to the 618, holding in here pretty well. We got the roadmap line above us, the 618 above that for this retrace at 510. Get above that, looking at 550, 560. Potentially bigger targets up here around 600, 610, 630. Potentially with the 618 bounce. All right, SAP, let's load the European version. Right here. Roadmap line still below us, so we may have more downside to go on SAP. CEG, that one still consolidating down here, not really indicating much of a bounce yet. And as I've talked about a little bit, maybe it looks a little better if we dip just a little bit lower and put that low right there where the 618 kind of lines up with these highs across here. But that doesn't mean that it can't be bottomed now. Watch for the break back through the daily roadmap line, back through the 618, and then sets up the target at 382. Just not convinced that one's done yet. And I've watched a lot of charts, and just when I look at it, I'm like, maybe. This one, my goodness, that's kind of a downtrend, and I'm not sure it's done yet. Like, that was the lowest low. We've got one move up. We've got the roadmap line there. We're not really breaking any prior highs. It's got a lot to work through before I would really be interested in this. I think I kind of want to see it break on up, retest these highs, come back down, retest the roadmap line, and then possibly get some upside going. So I'm not super excited about CCI right now. Coinbase, just sitting at the lows. We're right up, as I've said for days now, staying above that 170 area. Can still set this up for a bigger upside. We start pushing through that 170 area, we're probably going down to the 130 area. Don't really want to see that, but we got to have Bitcoin move. Bitcoin's got to do the move. FUTU, This one looks like we're going to 139 area right there. I mean, let's set this up. This has been the pattern for a while. Potentially even going to get the 150 area if the head and shoulders thing kind of works out. It's not the best head and shoulders, but it is one. And if that works out, 150 on FUTU. Could you make a few bucks? That's about 30 bucks a share if you took it that way. Play options, you got to make sure you buy the right time. I'm not sure on that one. And Tesla is down here in no man's land. Can this get a strong bounce with the market? Sure. We're sitting here above 210, can still salvage a bullish pattern, but it's starting to look like a three wave that may stop around this 500 area. I mean, that's just nominally higher than we were. It'd be 530, 540, 550 maybe. If we start breaking below 210 though, probably gonna go retest the lows at least from 2023, early 2023, if not. I mean, we could find support at the 2024 low there around 150, but it may come back down into this 100 area. It's entirely possible if we start getting below that 210 level, then break down below the uptrend of lows, maybe even make a lower low. That's not what I'm excited about right now, but it's possible. Like, we always gotta, like, where are you wrong? Below 210, we're probably gonna be wrong. Now, upside, roadmap line resistance. We get above it, that's what we need. I mean, and then the 618 level right up there is hanging out at the 357, 360 area. We break through that, it's looking like the upside's probably gonna come in play and maybe up to the 540, 550 area. But once we get in the 500s, you gotta start being careful. All right, bulls, that's a 3x leverage on the FANG innovator stuff. Signs of a reversal showing up, but that 618 hanging out right at the roadmap line. This has been choppy and sideways for a while. That leverage kind of eating it a little bit. I don't feel like this is the strongest opportunity, but if the market does a strong bounce, we could break through 160 and head right on up to 230 and possibly 250. AVGO, I'd love to see that pop on up here in the 210, 220 area. I'd probably book out my options I took on the great white shark trade. We'll see. I mean, that 220 area is the resistance, though, for setting up the bigger move to 260, 270 up there. Carvana has potential to bounce, but we're down here, broke below the December, January low there. You know, that correction from December, January. We did break below it. Staying below the roadmap line does set up a bigger downside. I actually went ahead and booked profit on my put. Just wasn't feeling super, with the setup potential for a bounce in the market across S&P and NASDAQ and all these other things that hit the roadmap line in the last few days, it just feels like we might see a bigger upside bounce, give me an opportunity to get a better put entry for the bigger correction that Carvana might do. That doesn't mean it's going to bounce here, but that's just kind of the way I felt about it. Moving my, opportunity cost. I booked a small profit and moved that money to other things. Reddit's here under the roadmap line. This might get further downside to come test the breakout level down there. VST, we're just kind of hunting the bottom like so many things. Potential to bounce here, 618 up there around 155, 219 on the upside. AXP, and nice big fat correction, well below the roadmap line. 618 up here around 296, 297, and looking for that 337 if we can get that bounce back up to the roadmap line in the 618. PDD, potential to have bounced off the roadmap line. We've got the prior high from just a month ago, not even hardly a month ago, 133. We get up through that. That's above the 618 zone. This is kind of had a setup to go up to 180 for a while, but like some things in the market, sometimes they take a lot longer than you might expect. It looked like we were going to get there really fast back in the last fall, and then we went on a big correction almost all the way back to the bottom. Now we're at a lower high. Now we're at a higher low. Is it going to actually work out, or is it going to fail? I can't say with any high probability, but the bias is up to that 180 target. I mean, I've put 2 arrows on there. Let's see if it'll work out. I mean, maybe I should add 3 or 4. I'm not exposed to this trade at all, though, so it'd just be a, bragging rights if we actually hit it. Anyway, SMH did break down, didn't make a lower low, so this adds some question to whether this chart is done correcting or if we need to dip lower than that low from all the way back there last summer. It's entirely possible. We need to make a little lower low before we can actually reverse this higher. You know, the big component of that is NVIDIA. I think the biggest component when we go look at it, more about the fund. Roll down in here, look at what it held. Yeah, NVIDIA, almost 20%. Next up, TSM, almost 12%, and then Broadcom, AVGO, 9%. So those three tickers, a majority of SMH, and then you can roll on down and see the other things. 26 total holdings, mostly in that chip type stuff. And we know Intel's beat down, ASML, still expecting some downside there. NVIDIA, possible to bounce on the market. TSM maybe has some more downside, so SMH maybe has some more downside to go. We'll see. If we get a strong bounce in the market, it'll probably take it higher. Microsoft came up just shy of where I expected it to tag, truncated. A lot of times we see the bigger tickers truncate the targets. Resistance at the roadmap line up here around 415, and if we can do all of that, sets the target up here 480, possibly 500. Not bad. Opportunity if that market bounce takes shape. IBKR made a lower low yesterday, 618 up there around 205, roadmap line around 175 and 250 upside target if we can start making some upside moves. SPXL, well, that one really extended down to the 272. Yet another reason that this might be done on the downside. Much deeper correction than I would have expected, but this can set up the next upside move. Pull that down, go from the highest high to the lowest low. This didn't make a high this year in February like ES and SPX did. It's kind of interesting. Does set up the potential for this strong reversal that takes us all the way up to 200. Be careful playing 3x leverage things, no matter what it is. I'd push my leverage button, but I don't have it here since I'm in front of a conference room studio audience. And ZS is just kind of churning here. Looks like it wants to do one more dip. We're sitting right at that 618. We've made the initial move down, hovering, potential to dip on down to that 130 area. Get the A equals C proportions. SOXX, where SMH did not make a lower low, this one did. So interestingly enough, maybe the BlackRock version of this actually is indicating that we did possibly bottom out in semiconductors. So that's adds a little ambiguity to what we got. We look at this one, a little different mix. They've got Broadcom at the top, NVIDIA second, Qualcomm there. It's a little more balanced with BlackRock's management style. As you can see, the holdings are all fairly similar size for a lot of these until you get up here in Broadcom and NVIDIA. So if Broadcom bounces big, has a nice potential to do so, this one could turn around pretty quickly. So better, what does this mean? Better opportunity in SOXX than SMH if you're into semiconductor ETFs. Probably a better opportunity here. This one potentially done on the downside, potentially could get that bigger bounce and pull that lower, pull that low over to the lowest low. Break through those prior highs, sets us up for 281 on the upside. SMTC, and that not particularly looking done on the downside. There is potential for this to bounce and go up to like 150 area, but not looking particularly done yet. We've got a big gap down below the roadmap line, so that may be, it's a giant resistance above us. Yen, if China keeps doing the bullish thing, this will probably rip on up to targets at 68, maybe 77. FAS, and that's, like I said, expecting some rotation into those financials. This may be a buying opportunity here. We did make a lower low. The fact that was higher doesn't mean anything here in this chart. That all a big correction from over here. That extension to the upside may be up around 200. That's a pretty fair upside potential going from 140 to 200. Now, doesn't have to do it. Right now, if I was buying shares, I'd probably buy those shares right where we are, probably set a stop down around 130. And we've got these other lows in here. Get down below that just slightly, give it just a touch of room. And very quickly, when we broke through the roadmap line, I'd be moving my stop up to positive And I'd want to see this break on up through the 166 area to confirm the conservative entry for that 199 target. So MDB, and well, just kind of chopping around here. Just kind of chopping around. And yeah, my camera, sorry about that. It's my computer kind of getting a little hot, and I'll just turn me off here. And MDB still has downside to go. Dash, sitting there, just kind of chopping sideways, potential to dip on down to the roadmap line. XLK, still got some, has it found a bottom yet? I don't know. We may dip on, this one may dip on down. And Spider Select Technology, what does that mean? Let's go look at what they're holding. You can roll down here, and Trading View, why I love this thing, it has like all the information I want to find out about a lot of this stuff. And we just go look. It's Apple. If Apple bounces, this is probably bouncing. Microsoft, Nvidia, Broadcom. I mean, a lot of these look like they're ripe to bounce. So this one might be near a bottom and could be, if you wanted broader exposure than just getting into Apple, Microsoft, Nvidia, AVGO. If you wanted some broader exposure to the sector, XLK might be a way to play. And when we look at the charts, what might we see? Well, let's kind of remove some of the stuff off here. Go from the high, go down to this low. The roadmap line in the 618, right there around 230 would be the conservative entry. Looking for 250, 253, maybe even 267 on the upside. So nice potential on XLK if you think we're going to see that technology bounce. And right here, Amazon sitting down here at that support zone I've drawn, comes all the way back from the prior highs. And do we hold that breakout, go higher, or are we going to crush it on down, get down near the 150, 140 area? That's a big question mark right now on Amazon. Can it hold the breakout that we had, or do we push on down and get that lower, bigger correction? Nvidia coming up strongly, roadmap line test coming up here in the next, maybe in the next few hours. If it'll draw, please. We'll see. Yeah, XLK might be a great one. Yeah. So potentially, if we get a bigger reversal take hold in the market today, we could see this roadmap line test on Nvidia. Then we may, do we get the retrace on retail sales on Monday? Can we break through the downtrend of highs? If we do, we've got upside. Put it back in the $3 trillion club and potentially go higher. CRM, now there's also potential that Nvidia doesn't break through the roadmap line. We just reject off of it and come on down to lower levels. Below 100, that would kind of be rough. But as I've been talking about for months and months and months, we have a bigger downside potential all the way down to 70 on Nvidia. CRM, we're pushing through what I thought would be support, and we may take a bigger dive. So that may not help XLK very much, since that's one of the components there. I will watch this one. If we can get back above the roadmap line, it does indicate some bigger upside, but this does have the potential to dip on down here near this prior low from back early last summer. We could definitely do that on CRM. So much for Slack, right? All right, SMCX, 2x leverage, and not really telling me much. SMCI is hovering right below the roadmap line. This kind of sets up the potential to get the continuation lower. I don't feel like we finished the downside, but if we get above the 73 area, then maybe we did. So usually when we break above, I like to see it hold right on top of the roadmap line. We went down below it, and we've been holding under it, which gives it downside pressure. So be careful being super aggressive on SMCX or SMCI until we're back above the high we had back there in February. If we can get above that high, you can start looking for upside, bigger upside in the triple digits, 100, 120, 140, maybe even back to bigger levels. The woes of SMCI could be done, but right now I'd be very cautious as long as we're under the roadmap line, under that 618 retrace from the February high to the recent low, which is around 52. So getting back about 52 would be your initial, and usually I say that's a conservative entry, but right now that would be an aggressive entry for me. This being the most aggressive, this still being an aggressive entry looking for higher prices. I guess it depends on your bias. Like my bias is still that this hasn't finished flushing out yet. I think there's still some hype in here. When you really look at the numbers for the company, it just doesn't sell, doesn't sell itself to me. These numbers are, they're still very elevated for a computer equipment supplier. And we just don't see giant PE and PS ratings on computer supply companies. I mean, you can look at Dell, you can look at HPE, HPQ, and we just don't see, you'd be like, oh, it's different though. They're supplying AI computers. So does Dell. Dell's actually a bigger purchaser of NVIDIA GPUs than SMCI. They build more servers than SMCI, but they're not making the news. They're not like, when Tesla posts their data centers and when SpaceX and XAI, all of them post their data centers, and they're not filled with Dell servers. So we'll see. I mean, it's always like a we'll see. We look at HPE, these PS, PE, they're just not. It's just when you look at SMCI, the PE ratios just don't jive with me for what their business is. So anyway, moving on. Back up here, PANW. Yeah, the list is pretty long today. So PANW, looking for that to bounce also. I need to pull the fib down to the low. And 194, potential upside there. And skip NVDU, that's just leverage NVIDIA. VRT, potential. We tagged the downside target that I thought we would. Potential for this to reverse. So we've got lots of reversals potential in the market. BABA, potential to extend on up. Nothing's really changed there. MU, still hanging sideways in the range. Resistance at the 115 area. Support down here between 79 and 90. As long as we're in the middle, just hanging. I do have MUU. That's full disclosure. I'm kind of bullish on that one, but I want to see it break on out. Net, just hanging out at the lows. If we can get the bounce up to 150, looking for 189. Snow, we do have the potential to dip this on down right in here. I am building a position, long-term position, adding at strategic points. I did buy one share at these lows over here when we broke down. Initially, I added a large call option right before earnings, out a long time. Right now, fishing for more position, more exposure, just not sold yet. If we get that dip down to the 618 and hold it, probably add some more. Watching for other large trades to come through. EDU, and looking for that to bounce off of the support. I mean, that was potentially ABC down, right to a great proportion at the 44 area. Break back through the 60 area, that could be indicating that we're done on this correction, and then confirmation as we break up through the 618 level, which is in the wrong place at this point. Let's pull it on down to the lowest low. That's 618 hanging out 72. So we get above 72, 110 on the upside. AMAT, and we're down to a support level, potential 144. If we can turn this around here, break back through, say 207. Set up for 277 up there. Nice upside potential on that one. VTI, total stock market. This needs to bounce with SPY. This is just another, similar to SPY, this is just another different version run by Vanguard. ARCB, it's Bitcoin ETF. We want to see that bounce with Bitcoin. CWeb, looking for this to pop on up with China, like BABA, Baidu, PDD. If those continue rallying, we'll probably see this on up. I am in some shares of this, looking for the 66 target up there. PLTR, we already hit. Shopify, looking for that to hold the roadmap line on this correction and get the bounce. So we're right there at it. But back above 113, sets us up for 136, 143. IONX, not enough candles to do anything. That's just IONQ though. And that chart may be done. We had a nice proportion for correction. Back through the roadmap line, back through the 618, excuse me, back through that level up here around 35. Can set this up for a bigger upside around 62. GE, I guess what's left of, the aerospace part, just kind of hovering. Looks like it really wants to do some more correction to me. Just not convinced there. FedEx, leverage Bitcoin, not going to do anything without Bitcoin. Same with FBTC. FNGO, 2x leverage on fangs. And that's not going to turn around without the fangs, but we've got the high, we've got the low, 618, and roadmap line coming up around between the 80 and 88 level. Get above that, 112, 120 on the upside PPC. That really looks like it's coming on down. Despite being on the poppers list today, it's probably going to come on down to the 45 area. TECL, that looks like it, I mean, this is 3x leverage on technology, and that still looks kind of bearish, so caution. If we go look at what they're holding, I missed the button there. More about the fund. Roll down in here. Apple, NVIDIA, Microsoft, Broadcom, Salesforce, Cisco, Oracle. I mean, Apple potential to bounce. Not so sure about NVIDIA yet. Microsoft potential to bounce. So that one could turn around, TECL. Even though the chart looks bad, you know, the leverage, you can't always tell on the chart. So Apple definitely scraping the top of my target for the downside. Nice opportunity to get off the mat here and go rally back higher. Actually push, with the deeper retrace, push the target on up to 267, possibly 275 if we can turn the market around here. And big if. We gotta really prove it to ourselves. You know, it still could do a lower high. Everything could stop at the 618 and turn down. So QQQM, yeah, that's just a NASDAQ alternate right there. OKTA, well, that one's on the path. Target on up tier 123. Already going, despite the market correction. CLS sitting down here, roadmap levels. We're looking for the bounce, 116. Get it on up to targets 157. BitU, more leveraged Bitcoin. GBTC, more Bitcoin. AA Lab, not convinced this is going higher yet. This may do the deeper retrace into the 40s or go revisit the lows. ALV, and just pushing on out. Where's the top? Not sure. Not sure. Trend pullback continuation. There's been no pullback really, so possible 357, possibly 415. DDOG. Maybe we're gonna dip down to the 618 level. This could bounce from here and set up the bigger potential to go up to 200. That'd be really nice on DDOG. ARM still grinding down. Maybe we have a support level. Maybe we go back down here where I thought we were going to visit. It's been just grinding sideways for months. I mean, really the excitement ran out over a year ago, and then we've just been kind of chopping in this range in here between all the way down here at 85 and all the way up here at 190, 185. So 100-point range, giant range, but it's just been playing around in there, not really trending. So the trend has been essentially sideways, and no indication we're going to do anything at all. QLD, this is a ultra, leverage QQQ, kind of like TQQQ, and just sitting down here messing around. Can we find a low? I don't know. It's going to depend on the broader market to reverse. IWM, as I talked about, I expect this to do a 618 retrace. And if we get a big market reversal, I expect this one to top out around this 225 area with the Russell future chart. And DPST potentially down to support. This could actually reverse here and rip higher on these regional banks. Break back through this consolidation here at 130, 196, 218, 220, upside potential. And skip through some leverage. ANET potentially down to support zone. We do have further support down here at 60. If we can turn this around, we could see a bounce up to 140 on ANET. TQQQ, leverage Qs, USD is another semiconductor ETF. Did not make a lower low like SOXX did. It's, I don't know. This is leveraged. Be careful. If we turn the market around, this can shoot up to 96, possibly 106. It'd basically be a double on shares. So nice opportunity there with the leverage. C Limited, sitting at targets. We might see a retrace there. Dell, if this breaks down below the highs from last summer, we may see further downside around 70, possibly down to 60. CRH, hanging at the roadmap line, potential to bounce up to 113. Airbnb, we're just kind of hanging here. We tried to break out the top, tried to break out the bottom, and sideways is what I've been saying for a few days now. JD, Potential to pop that on up 50, possibly, maybe up to the prior highs back here from 22, around 70. Nothing's clear on that one right now for me. UPRO, leverage S&P, QCOM. We've already kind of beat S&P and QQQ to the dust, so I'm just kind of ripping through them. QCOM, potential downside support at 41. You know, this is the support zone. We're just sitting right above it. The resistance to breaking out right up here around 180. If this can get itself together, we could see a potential big rally up to the 350 area. But you know, with Apple potentially giving up using their chips, do they have a market that they're going to replace that with? Do they? I mean, or are they going to suffer further downside? Not sure we've figured that out yet for Qualcomm. LRCX pinned between the roadmap line and the uptrend of lows, so not really moving yet. Kava still has that bigger downside potential down to the 618 zone, and I'm not sure we're going to be able to bottom until we get back to that 54, which is kind of where the initial high was right after it IPO'd back in 23. IVW just grinding right under the roadmap line. That's another S&P stock. Different, you know, lots of different. You know, this is BlackRock's version. We're most familiar with SPY, which is Spider version. Google sitting down here under the roadmap line. Potential for this to reverse, but you know, it does have bigger downside potential. Cooking might go back to the lows around 150. But that high, that low right now, if we can break back up through the roadmap line in the 189 area, 215 on the upside. And TXN looks like it's on the path to go tag that target that I put on there however long ago. Not bad. All right, potential stuff that pulled back. ABT. Yeah, that hit targets on the upside and retracing to the roadmap line. Didn't quite get there. I might expect further downside. T-Mobile, same. Kind of expect further downside. UVIX, UltraVIX, watch out. That may have topped out back a couple days ago on the 11th. This may come back to the bottom very quickly. XPOF, Exponential Fitness. Boy, that went right back down to the lows. Ugh, stay away from that one. Yang, also back down to lows as China recovers. TECS, 3X Technology Bears is maybe that topped out. That can roll back to the bottom. You know, lots of these leverage things. VRNA, potentially going to come back to the roadmap line. That's pharma. And that's the end of the list. Whew. That was a bunch. So, bias for the day. I don't really have any banging bonus trade opportunities because, well, the market's been just sucking it up and not really presenting anything. If we get a bigger bounce, we'll probably kick off a whole bunch of opportunities. Maybe a target-rich environment, like I said, but you got to wait for the setups. Be very, very careful with your money right now. If the market continues downside, we can lose. All right, that's the caution. So what we're looking for, we've got this resistance zone right up around 5650. I want to see that as an initial kind of bounce area. You can watch the lower roadmap lines. We've got the 15-minute on the SPX chart. We haven't really been able to break through that for, gosh, it's been all the way back since the 20th of February. So a couple weeks now. If we start getting above that, can hold above it, that's the initial sign. We've got a reversal on SPX. Looking at ES, you know, we've already tested into it. We're kind of trying to push through. And so that leaves us with a 30-minute is probably the one that we need to break and get above and hold. We start doing that. That it's indicating we're starting to build a reversal. Then we've got the hourly right up here around 5660 on the futures, and then we've got the 4-hour on up even higher. And if we get through all those, it really sets us up to be done on this correction. You know, why? Why would we be done on the correction if everything looks so bad with tariffs and government shutdowns and, you know, this, that, and the other? It doesn't matter. Like, it doesn't matter. Like, the technicals in the chart say that we can bounce. And the news typically, I mean, it's kind of like an echo chamber. When the market's down, the negative news gets to play because that's what everyone wants to hear. We won't see positive news until the market actually starts flipping. Everybody wants to see positive news and starts reacting to that. Even then, humans love negative news, so we'll always have negative news it seems like more than we will positive news, because that's just the way humans are. So thanks for coming, everybody. We'll see you again on Monday. I'll be back in my office and try to talk about tariffs and stuff like that. Have a great day. We'll see you